Hello everyone. This is the pre-market report video for today, 30th December 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Before going to the video, last night our channel reached 1 lakh subscriber count. My sincere thanks to all for your support. Anyway, quickly let's see what happened in US market on last Friday night. First of all, after a long time, US Treasury yield moved above 4.5% to 4.63%, anticipating the slower interest rate cut in 2025, which is negative for the market. Second, it's just year-end related profit booking. Before last Friday, overall in 2024, year-to-date, Nasdaq increased 35% and S&P 500 increased about 25%. And in addition, just because Trump got elected, for that alone, Nasdaq increased near 10%. So last night, all three US major index had the profit booking, especially the big tech stocks, which was under severe pressure. Now we can expect more profit booking as we are closer to January 20th, as it's the inauguration for the Trump second term. So Friday night, Dow Jones was down by 0.77%, S&P 500 was down by 1.11%, and Nasdaq decreased 1.49%. In case of VIX, it increased 18% and moved near 16. Then about oil, it increased 1% as US crude oil inventories report showed that their stockpile decreased by 4.2 million barrels. So at the time of this video, WTI crude trading around $70.5 per barrel and Brent crude trading around $73.5 per barrel. Then regarding major Indian ADR and GDR, as it is except Wipro, all closed negative. However, it's less than 1%, and also if we calculate the arbitrage difference, only banks indicating the negative 0.5 to 1%, which we will discuss in the moment. Other than that, both the IT stocks indicating flat to positive. In addition to the bank's negativity, unlike the Friday Indian market, Reliance GDR closed negative. And despite this ADR weakness and US market negativity, actually GIFT Nifty was not that bad. On Saturday early morning, it closed at 23,960. Equating that with the Indian spot market, it's indicating flat to negative opening around 40 points, depends upon the premium. So those were the things happened in the dollar market. Now let's discuss the India related info. On last Friday, after our market close, RBI and Indian government released lot of macros. First, let's discuss about the positives. One, current account deficit. Market expected to increase around 1.5% of GDP or above $15 billion. But fortunately, it came only 1.2% or $11 billion. And more importantly, balance of payment. India received $18.6 billion into the country, not the outflow. Some might ask why it's important. At present, in the last 2 odd months, Indian rupee was under pressure. It dropped from 83 to above 85 rupees for $1. So there is already a trading pressure in the rupee. Now, if this data also came as not in favor, means it will add probably additional pressure on rupee. Here, please note the pressure on the rupee was on Q3 between October to December period, whereas this CAD data was for Q2 July to September period. So this macro data is more of neutral to positive. Then the second positive, according to Indian government, household spending on non-food item spending increased substantially. In urban area, it increased 8% and in rural area, it increased 9.55%. So I consider this as positive for non-food FMCG related companies. So we can expect consumer durables as focus today. Then on the banking side, it's more of a mixed to negative. On Friday evening, RBI released the bi-weekly bank's deposit and loan growth, which increased to around 11.5% from previous 10.6%. So if we compare the previous data, it's okay, improved, but it's still long way from 6 months before good data of 13 to 15%. Hence, as I said, it's improved but still not the good data. And the more alarming negative thing was bank's liquidity deficit concern. If I remember correctly, exactly same time last year in 2023, Indian banks started to fell into the liquidity deficit from liquidity surplus. Then that deficit continued until June month 2024. Then from July month onwards only it moved to liquidity surplus. Now again in December it fell back into deficit. And the worst part was analysts expected this deficit might increase up to 3.5 lakh crore rupees in coming March 2025, which will be worse than last year. Why it's important? if banks don't have liquidity means, then they won't issue faster fresh loan, and also say even if RBI cuts the interest rate in coming February month 2025, then also banks won't pass that benefit to the customer. Hence, even the interest rate cut won't benefit the Indian economy. Now, in order to improve the situation, RBI has to perform open market operation OMO. So basically, it's not good, but because it's not a new problem, market may ignore this, as RBI and Indian banks already dealt with similar situation. As a summary, US market had profit booking, and on Friday, most of the European market also closed negative. In addition, with this bank ADR and GIFT Nifty negativity, it looks like Nifty might open slightly negative. Let's see. In addition, please keep an eye out for any geopolitical escalation in the Middle East or Europe side. Then, as per stock open interest, RBL Bank, Manappuram, Cummins India, Coal India, Federal Bank and NHPC got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, it's Jubilant Footworks, Bata India, Paytm, Wipro and Trent got an increase in open interest with a positive price close, which means these stocks got the long build-up. Then about the things to look out, regarding macro, nothing that I'm aware of during our market time, but in the night for US, Chicago PMI data and new home sales data are some of the things we need to keep an eye out today. Coming to technical, last Friday Nifty opened 50 points gap up, and throughout the day it traded flat with a positive bias and closed above 23,800. Thus on the daily chart, Nifty formed a small bullish candle with a upper shadow. Here, having upper shadow is indicating a selling pressure on the higher side. Then the two very interesting facts are, one, it traded within the 20th December big red candle, and second, within the 200-day moving averages. I mean, on the top 200-day simple moving average 23,862, and on the bottom its 200-day exponential moving average 23,694. So the breakout on the either side will determine the future direction. Other than that, on the negative side, it's still well below the 10, 20, 50 and 100-day exponential moving average and trades within the lower Bollinger Band, with RSI and MACD momentum indicator having the negative bias. So all indicating weakness. Overall, the sentiment has not improved yet. If Nifty decisively surpasses and sustains above the 200-day simple moving average means, then possibly it could move towards 24,000 to 24,200 zone. On the other hand, if it falls below 200-day exponential moving average, the decline may extend to 23,500 December 20th low. Then for Bank Nifty, the story is not so different. It opened 100 points higher and moved above 15,600 but closed near 15,300 due to selling pressure at higher level. Thus on the daily chart, similar to Nifty, Bank Nifty also formed a small green candle with a long upper shadow, but one different to Nifty, on the positive side, it trading above both 200-day moving average. Then on the negative side, for the second day in a row, Bank Nifty attempted but failed to close above 100-day exponential moving average, indicating a strong hurdle on the higher side. Furthermore, it still remained below the 10, 20 and 50-day exponential moving average and in the lower band of the Bollinger Band. So both the 200-day moving averages is around 50,500, which expects to act as the support. Then on the upside, 100-day moving average zone 15,700 to 15,950 expects to act as the immediate resistance. Then the Bollinger Band middle line 52,500 expects to act as the following resistance. Regarding the options front, the maximum call option open interest was at 24,500 strike, followed by 24,000 and 24,200, with maximum new call option writing at 24,200 strike, followed by 24,100 and 24,500. Then on the put side, the maximum open interest was at 23,500 strike, followed by 23,800 and 23,000 strikes, with maximum new put option writing at 23,500 strike, followed by 23,000 and 23,900. Thus, from options data, 24,500 level is expected to be the key resistance with support at 23,500. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.